All right, guys, today I'm going to be sharing with you a recap of a day trade that I took today with my private community live. So I called this out earlier today, and what we were watching for was this rejection here on the 2-minute for QQQ. And our requirement was very, very simple. We are trading under the 11 SMA, under the 50 SMA, and under the 200 SMA, meaning that within the day, we're in a downtrend. You can see that we initially had this break of structure here at 384.73, but I waited to get in. I wanted to see the natural flow of the market, a potential test back up here of 385.50 before I would go shorting that pop back down to potentially low of session. So we see this order come through. We're just going to use this as like paper trading, but we went through with options, which I just showed you guys, and we started to see this move and breaking over the 200 SMA. Now, anytime that I'm setting a position, unless I'm trading with my trading bot and I'm just following my scripts every day, which is most of the time what I do, I'm going to give myself a wide stop loss level. Most of the time, it's simply because I understand that there's a lot of manipulation within these areas. Look at last time when we came up over the 200, we probably tagged a lot of people out who were short here before finally selling off, bouncing back up, etc. So my stop loss was set up around 386.07, and what I did was I averaged down very aggressively. I just doubled down, I should say, not aggressively, but I did double down up here so that I'd have a better average price. Now, I want you to understand that I didn't just average down for the sake of saying a prayer and just averaging down in hopes that things worked. I knew that our risk versus reward was so solid at that level because it would give us an average around here with a stop loss here and a potential take profit all the way back down. So a 5-to-1 risk versus reward. From here, we rejected. I ended up holding in the trade, and then boom, we slide underneath the 200 SMA. So at this point, I was up, and I thought to myself, we're looking like if we reject and get under this 50, that we should continue to sell off. Started to see this push back up, the test of the 200, and then eventually the sell off right here, where I ended up closing at 384. Now, the reason I closed at 384 instead of riding all the way down was because I saw this potential inverted head and shoulders forming here, where we have a shoulder followed by a head and a potential shoulder. And I also know, this is like the major thing here too, guys. It's very simple, but it's not a lot of people do this. We're trading against the trend, right? The market's been doing absolutely nothing but running for the past couple of days. So why would I trade against the trend? And so in that instance, I decided to close out my trade right here for a solid profit. And then we actually, I believe, ended up bouncing, and we didn't get the inverted head and shoulders break. But look at what's happening now. We could potentially get this gap up tomorrow. So I hope that this video helped, guys, gave you an understanding of why I ended up actually taking profits early, why I averaged down at a specific level, and why I set my stop loss at that specific price. One of the things that you should be doing is focusing on systematical trading, whether that's following a trading bot or creating a trading script that you guys have either created yourself or that you follow maybe one of ours. But on top of that is learning how to actually be able to see this in real time and decide, statistically, the odds are in my favor to the downside, but I'm noticing that price action is holding a specific level, that money's coming in, and maybe I should get out. So if you guys want to learn all that, check out all of our resources, and I'll see you guys next time. Peace.